Today on Paralegal America, I'm breaking down a fiery Senate Banking Committee exchange. Senator John Kennedy put top financial leaders on the spot, grilling them on deposit insurance and accountability. Stick around for sharp exchanges and tense moments as reforms are put to the test. Senator Kennedy pressed for numbers, turning to Mr. Podsiadly, whom he called Scooter, and demanded specifics. Podsiadly hesitated, saying it had to be empirically based.
Senator Kennedy.
Mr. Rice, you think we ought to raise the deposit limit to 20 million, right?
And that's for payroll accounts, sir. Yes.
And Mr. Harrison, you agree with that?
I think that'd be helpful, yes, Senator.
Mr. Kelly, how about you?
The recommendations we put forth, Senator Kennedy.
Just give me a number if you would.
I don't have a number. Our recommendation is it needs to be studied and empirically based.
Okay. Mr. Podsiadly?
Yes. Yeah, thank you, sir.
My colleagues are impressed that I can pronounce
I'm very well done.
I'm kind of impressed myself.
I used to get a lot of starts with a P going in my undergraduate in high school.
All right. I'll call you Scooter. How,
I'll take that as
give me a number.
I would agree with Mr. Kelly that it needs to be empirically based and that.
Come on, guys. I know it ought to be empirically based.
Okay, well, I'll say this. The one concern that I do
You used to work
have,
at FDIC. Give me a number.
yeah, well, the one concern I have is some institution loading up on a significant number of $20 million deposits that then ultimately.
So if you don't like 20, give me a number.
I don't have one off the
You're
top.
not going to give me a number.
I will give you my best guess, which is that 250 is not high enough, and 20 million is probably too high.
How much?
I said 20 million is probably too high.
Okay.
Because I worry about.
Let's suppose we go to 20 million.
Yeah.
Kennedy wasn't satisfied. He wanted something concrete. Podsiadly finally admitted 250,000 isn't high enough. 20 million is too high. This back and forth set the tone. Kennedy pressing, witnesses dodging. Kennedy quickly shifted gears, asking who would push back if banks had to pay higher assessments for more deposit coverage. Mr. Kelly wasn't sure, but Harrison noted smaller banks might resist since their accounts aren't that large. Larger banks already enjoy implicit coverage for free, so they have little incentive to support reform.
Banks are going to pay this through assessments, right?
Yes, correct. Risk-based.
Okay. Mr. Kelly, who's going to push back among the banking community?
Senator Kennedy, I'm not sure who will push back on that.
All right, Mr. Harrison?
I think there's some smaller banks that will feel they don't need it. Their deposit accounts aren't that large, and they would be, not as willing to do that. I think some of the banks that currently have coverage for free will likely push back. Or
Some of the what?
Some
larger
of the banks
banks?
that have implicit coverage
Some of the larger
for
banks?
free. Generally, the larger.
Some of the larger banks?
That is correct.
So you think the larger banks will oppose it?
I don't think they'll support it. I don't know if they will oppose it.
How about you, Scooter?
I love the new nickname. I will take that as a warm regard. But
It is.
I would say that my bigger concern is the aggregation of deposits.
Who's going to push back?
I don't know that you would have any institution that would push back other than as
Everybody be happy.
well. It depends on what the cost is, right?
Mr. Rice, who's going to push back?
Not our 144 million members, sir. They'd be delighted that their paychecks are guaranteed.
Who's going to push back, though?
The bankers, sir, the large banks.
The large bank.
They're not here today, and I think their silence is implicit on their stand on this.
Okay.
The exchange heated up when Mr. Rice spoke. He was blunt. His members wanted stronger deposit guarantees, but the large banks would push back. They already benefit from an implicit guarantee. Not a single witness disagreed. That silence spoke louder than words. Another witness tried to explain the complexity, but Kennedy cut him off. "We've got a problem," he said. "We need a number, indexed to inflation. Taxpayers won't pay, the banks will pay." Kennedy boiled it down to accountability and fairness.
So here's what I hear you saying. 20 million indexed to inflation, but the large banks are not going to like it because they have an implicit guarantee. Does anybody disagree with that? Does anybody disagree? I certainly don't with Senator Warren's assessment that the big banks don't have to worry about it because they're going to be bailed out. Somebody disagree with that? Okay.
Well, let me add a little color, Senator. I think perspective. So I led a committee. And
I'm sorry, sir?
I led a committee that included banks of all sizes.
Right.
And one of the things I learned in leading that committee is that there is a lot of complexity associated with the prudential regulatory aspect of those larger institutions. Their liquidity requirements are very different than mine at $700 million a year. And so it's something that I had to become sensitive to as a leader of that group. And so while we sit here,
Kelly, let me stop you. I understand. You're a smart man and you're a successful man.
well, I appreciate the
And
compliment.
I
Senator.
appreciate that. But you're telling me here today, all of you, we've got a problem. And
Correct.
we're not going to, this isn't directed toward you, sir, but we're not going to solve this problem by pondering our navels. We're going to have to come up with a number and index it to inflation. Taxpayers won't pay, the banks will pay. And then find out who's going to push back and why. I mean, that's the challenge. I understand the difficulty and the nuances and the trade-offs. I get all that.
Thank you.
And you make, I don't mean to denigrate your analysis, because you know a lot more about this than I do. You're saying we have a problem. I'm asking how we solve it. And what I'm hearing is $20 million, index it to inflation. The larger bank's going to raise fresh hell.
The message was clear. Deposit insurance has problems. Numbers must be set, indexed to inflation, and enforced. Big banks won't like it, but taxpayers shouldn't pay. Who benefits, who pays, and who's ready to fight for change? This Senate Banking Committee hearing exposed the divide between small institutions and Wall Street giants. Kennedy's tough questions revealed big banks expect bailouts, while smaller banks and depositors bear the risk. This is Paralegal America, cutting through the noise to bring you the facts.